Jane, I wanted to get your take on the Labour Party win in the UK and the movement that we've seen with the British pound against the dollar, the euro against the dollar as well. What's your take?
Well, if we look at cable, well, yeah, that has done pretty well. In fact, sterling right now is the best performing currency over the last 24 hours or so. The dollar, of course, is weakened by itself over the last few sessions as the market looks ahead to the possibility of a September interest rate cut. But sterling has done well. I mean, the gains that we saw today weren't great. They were fairly moderate. But actually, sterling is now the best performing G10 currency in the year to date. And that doesn't mean it's a strong currency, but it does mean that it is improving really from a very low base that we had back in September 2022 when we had, Trussonomics and the gilt market really worried about what that Prime Minister may do. Now, Liz Truss, today lost her seat. And we have, of course, an awful lot of headlines telling us that we've now got a landslide victory for the Labour Party. Now, that, of course, is true. But if you dig a little bit deeper into the data, perhaps you see something not quite so encouraging for the Labour Party. Now, in the UK, we have a first past the post system, but Labour managed to pick up this majority of seats by only getting a very small increase in the national share of votes, because what it appears has happened is that voters that previously had voted for the Tory party haven't necessarily all migrated to Labour, but they've gone to smaller parties instead, meaning that Labour hasn't really picked up an awful lot more votes this time round. And that suggests it's going to have to deliver on growth and productivity and people's incomes if it really is going to win the election next time around.
And the euro edging higher with the next round of voting in the French election taking place this weekend as well. What are you anticipating there?
Well, I think that's a lot more interesting, perhaps, than the UK election. Now, the market has been encouraged, euro certainly moving up as polls come out that the far right, Le Pen's far right party, is unlikely to win a majority. Now, from the market's point of view, a hung parliament is better than a majority for the far right. But, it's very difficult to celebrate a hung parliament, because if we think about France's budget position, it's not great. The budget deficit in France is 5.5% of GDP. Brussels has wrapped France on the knuckles, along with Italy and 6 other EU countries earlier, just about 2 or 3 weeks ago, for not doing enough really to curtail their budget deficit. And when you have a hung parliament, you may not have the far right in enacting some of their policies, but it's going to be tough to try and get that budget deficit in. A lot of the far right policies, things like wanting to reduce the retirement age, could be expensive. A lot of the policies of the left wing alliance, which is second after the far right in this election, are also potentially going to cost France more money. So it could be quite difficult to get that budget deficit in. And that probably means that as we go into the second half of this year, we could be increasingly worried about some of the budgetary positions of countries such as France and maybe Italy too.
Jane Foley, thank you so much for taking the time here with us today. Head of FX Strategy over at Rabobank, Jane Foley.